Greg that's there. Anyway.
Hey, good evening, everybody. Is that changing to on your screen?
Yep.
Can you now see us talking?
Yeah.
Greg?
Yep. Yeah, you can.
Oh, yes, cool. Excellent. Welcome and thank you, everybody, for joining us tonight, for taking some time out to join us on our very first Market Buzz to have a chat about where the market's going and a couple of other things. Just a couple of, I guess, housekeeping. So if you've got any questions, we've got a Q&A section. So if you want to drop a question in there, we'll do our best to keep an eye out on the questions as they come up. And we'll do our best to answer them. And if we can't answer them, well, we will log the question and we will do our best to table it and get back to you on that. The format tonight's going to be very casual. We're going to have a conversation. I'm going to introduce you to my fellow panelists in a minute, but we're just going to have a conversation. And the topic tonight is, the main topic for tonight is the city dwellers' exodus to greener pastures, talking really about the idea of the growth we're seeing in the regional areas of Australia. But before I get going on any of that, I'd love to introduce my fellow panelists tonight. And so tonight we have Paul Ryan, economist with the REA Group. Thanks for joining us, Paul. Fantastic to have you with us tonight. And looking at your LinkedIn profile, Paul, it says there that you are a lover really of data and analysis. Now, do you want to take us through a little bit what that actually means?
Sure. Thank you very much for including me in the inaugural chat. So I'm an economist by trade. I spent 10 years at the RBA before joining REA, which I'm sure everyone would recognize as realestate.com.au is our main product. And so essentially, my job at REA is to turn the reams and reams of data that we get, both on property transactions, rental transactions, as well as user interactions with our website. So we get this really good feed of where people are looking before they even buy, and synthesizing that down into stories to try and understand like what is happening in the market, what's driving various trends that we're seeing, and what's likely to happen in the future. So I'm looking forward to kind of take you through a big kind of overview of how we're thinking about the market at the moment.
Cool, thanks for that, Paul. And my other two panelists tonight are Mr. Gregory Dixon and Matthew Brown. So Greg is the real estate licensee at Bricklet, and Matthew is one of our Bricklet specialists, but also carries the hat of chief educator.
Yep. Come full circle.
Greg, why don't you just introduce yourself for those who haven't met you before?
No problem. Thanks, Ray. My name's Greg. I've had a real estate license for quite a long time. I don't practice selling real estate. That's not a passion of mine, but I do practice being involved in the market and take a very keen interest on what's happening in the market, both locally and around Australia. So I really enjoy that. It's been a passion of mine since I was in my teenage years. So I very much enjoy the real estate market and what's happening in it. And also I am involved in some small renovations and other uplift type scenarios for property. I enjoy it.
Awesome. So you've been involved probably since you're teen, so you've been there for quite a few decades, mate.
Oh, is that what you guys are laughing at, you buggers?
And Mr. Brown,
this grey hair just signifies experience.
And Mr. Brown,
not old age.
No worries, buddy. I don't think I'm going to go grey. But anyway, we'll move on. So Bricklet specialist. So my passion is really about helping people create success in life. So a lot of that is around educating them on things that they're not aware of, that they don't know. A key part of that is obviously goal setting and having a thorough understanding of where they currently are, and then helping them with a strategy to then get them where they want to go. So in terms of education, so I'm a school teacher by trade. I'm a jock. I taught PE. Then I also was a mortgage broker for a while, financial advisor, and an accountant. So I've done a few different things, got a couple of bits of paper behind me, but apart from all of that, I really am most passionate about empowering people to create success in their lives. So that's me.
Awesome. And for those of you who haven't met me before, I'm the Chief Community Officer at Bricklet. And part of my role is to work with the community, and not just a vertical kind of communication channel, which is just us kind of broadcasting, but really encouraging a horizontal level of communication where as a community, we really are communicating with each other, sharing experiences, sharing knowledge, sharing learning, as Matt said, which he's very passionate about. And so that's the role that I play. And I'm really looking forward to having a conversation with the panelists tonight about some of the, I think, really quite hot topics. And in the process of doing that, trying to really cut through some of the noise, because there's a lot of noise out there in the media about all the stuff going on in the marketplace around property. And, you know, the property marketplace is not just one big thing. There are many sections and segments to the property market. And so we're going to be talking about a particular one tonight, which is regional Australia in particular. But before we do that, I'd love to open up tonight's conversation with Paul giving us a bit of a market update. Paul, you good to do that, mate?
Great, yeah, let's jump in. All right. Okay. That worked?
Yep.
Excellent. All right, you can all see that?
Yeah, we can see that. It's great.
Fantastic. Okay, so I've got kind of 10 or so slides. I'll just take you through a broad kind of top view of the market. And then I've done a little bit of work on this question about regional shift and what we think is driving it. So I might show a couple charts of that before we discuss. So I think the first thing to start with is the key driver of the big influx in demand that we've seen over the past year in particular has been the very big decrease in borrowing rates. So you can see here, this is borrowing rates over the past 2 decades. And you can get a mortgage still below 2%. And this is kind of the average rate of new owner-occupier loans. It's kind of been a key driver of why property has remained so resilient over the past year, despite the turmoil that we've seen across the economy. And to categorize that, here's a quantification of the thing I was talking about before, user interactions on realestate.com.au. So this is our metric of buyer demand. So what this tracks is we categorize people as either serious buyers or not when they come onto our website based on how they interact with sites, whether they save properties, whether they contact agents, things like that. And then we track how many of those serious buyers we have in the market. And at the moment, you can see that the level of serious buyers is about 50% higher than we saw in average over 2019. Yeah. And that's remained resilient since kind of basically the end of the first lockdown in 2020. We saw this huge boom in demand, which has kind of persisted for the past kind of year and a half. Now, I guess it's interesting to track who is driving this demand. Yeah. So this kind of shows lending data and shows that initially we had this big boom in owner-occupier and first home buyer borrowing in the middle of 2020. And more recently, kind of towards the end of 2020 and the start of 2021, we've had investors come back into the market in a really strong way. But you can see there that these lending amounts are enormous, particularly for other owner-occupiers. They're much, much larger than we've seen over the past decade. So now there's a lot of stories that people would have seen about why property is booming so much. This whole idea of people having spare income that are able to go overseas and spend this money on holidays. And it's partly that people have more income, and partly it's that people are kind of reassessing what home they want to live in. Do they need more space? Do they need a home office? Do they even need to commute anymore? Are you able to move to a regional area and take advantage of both the lifestyle amenity as well as cheaper prices?
Okay. Just on that, Paul.
Yeah.
I'm going back to the owner-occupier and the investor market, but yeah, because I read an article recently that there has been a significant increase of investors now coming back into the marketplace. And is that also partly as a result of, for owner-occupiers, that the pricing of the underlying properties are becoming more and more out of reach? Is that got anything to do with it at all?
So I think the balance has shifted. So if you looked at, say, this time last year, it was easy for an owner-occupier to decide to upgrade their property if their job was safe. Say, if they worked in a white collar job in a CBD, and it was pretty clear that people were never going to go back to full-time office 5 days a week, and you knew that kind of your job was going to persist through this whole crisis, owner occupiers could say, okay, well, I can think about, should I buy a bigger house, a few kilometers away from the city? Should I buy, a bigger house in the same suburb? They could start to make these decisions. Whereas if you're an investor, I think you need to have more certainty about broader economic conditions. So investors care about immigration, investors care about unemployment in general. So I think what's happened is that kind of initial shift towards owner occupiers was about people making that individual decision. And then later, as we've seen that the economy has rebounded much faster than expected. And we kind of are fairly confident that, say sometime towards the start of next year, we would hope the economy will be back to normal, immigration will be back to normal. Investors have kind of sensed that there's a light at the end of the tunnel here, which is there are going to be strong demand for investment properties. And basically to take advantage of the very good pricing conditions that have been brought about by those low mortgage rates.
Yep, cool.
Yeah, hi Paul. I was reading a couple of things this week as well, and it seems that there's a lot more volume of actual property being listed on the market as well. So not only are we seeing property prices hitting all-time highs, but we're seeing immense amounts of volume of property transacting. Have you seen that?
That's very prescient because it's exactly my next slide.
Just before we move on, Paul, I just wanted to ask you a question on this current one.
Course.
And the reason being, I find it fascinating compared to what's being said in the media, or what impression you can get for investors compared to owner occupiers, but still the owner occupiers are way outstripping investors at the moment.
It's astounding.
Astounding amount. Whereas in the media, you would think the investors are really starting to catch up, but they're actually quite a way behind. I note they are coming fast, but they're still a way behind.
Yeah, so investors have had this big decline since around 2016, 2017, when APRA introduced those investor lending speed limits, as well as the interest only changes. So investors have since that point had less preferential pricing. And the writing's kind of been on the wall until now, where mortgage rates have come down enough that investors have seen that there are bargains to be had, or not necessarily bargains, but I guess it makes sense now from an investment perspective to get back into the market.
Yep, interesting.
But yeah, you're exactly right. Investors are coming back off a very, very low base of lending, whereas owner occupiers are going ballistic at the moment.
Yeah.
Now, so moving on to transactions, you're exactly right. So we've seen what this looks at is each of these lines is a calendar year. And so you can see that the red line, which is 2021, we've seen a huge amount more stock transacting in the market over 2021 than we had. And that's partly a lot of pullback. So a lot of people delayed selling properties in 2020 because there was uncertainty about whether, say, at the moment, fewer people would list the property because they don't want their selling campaign to be interrupted by a lockdown. And the start of 2020 kind of saw economies be open and selling conditions really be quite favorable. And as you saw, there's a lot of demand. Sellers can be confident that there is going to be a good supply of buyers paying good prices for property.
Yeah, but interestingly, Paul, when I look at those graphs, those lines, they mimic each other when you're looking at 2019, 2020. They're not that far apart in terms of the space and volume of property coming on. So it doesn't really indicate there's going to be a huge amount of pent-up demand of sellers wanting to come in. It really just looks like there's just a lot more property being transacted. I guess if there's a lot of owner-occupiers buying, then they're also selling. So, you have this double amount of property being transacted. So yeah, it's very, very good time to be a real estate agent. Or a mortgage broker. Yes, there'll be a lot of commissions to be had in this market. So you're right. Now, part of that's because I think 2019, if we think back that far, was actually kind of coming out of the end of the last kind of weakness in the market. Yeah. So 2019 wasn't a typical year. 2020 was starting to look really good. If you look at like the start of the year there, until obviously COVID happened at about week 14, it looks like on this chart.
So there's kind of, if you're a seller that's been waiting for a really strong spring season, you've been waiting 2 or 3 years now. So I do think that potentially we'll have quite a bumper spring, particularly now that we're going to have fewer listings over the next at least couple of months in Sydney and Melbourne. So my next chart is what are buyers looking for, and you're exactly right. So if you get more of this owner occupier churn, so people reassessing what they want to live in and moving, that's going to drive up these transactions. And what we've seen on our site is people are searching for bigger homes. So this is searches at the start of 2021 compared to searches at the start of 2020. And you can see that there were far more searches for 3 or more bedroom homes at the expense of 1 or 2 bedroom homes. So there's been this marked shift towards people looking for larger dwellings. And it's those trends that we were talking about before. People are spending more time in their homes during lockdown. People are anticipating working from home more, so they want a home office. It's all of those kind of things. And what that's resulted in is we've seen house prices outstrip unit price growth since about the middle of 2020. And you can see from this chart that that's quite atypical. So traditionally, houses and units tend to have pretty similar price growth over a long period of time. And that hasn't been the case over the past year and a half. And the other thing that we've seen is regional prices have outstripped capital city price growth. And again, that's quite atypical because in general, you can see just from this chart, which is only 6 years of data, you can see that capital city prices have much more cyclicality to them. There's bigger highs and bigger lows. Because there are supply constraints in the cities, it's harder to build new houses. Changes in demand have big effects on prices. So it's rare to see regional prices have these bigger upswings than capital city prices. And that's a unique part of this post-COVID housing market that we're seeing. Now, I just wanted to show just really quickly, I've done some work on the effect of lockdowns on the market. So just what could we expect over the next couple of months in Melbourne and Sydney. And on the left here, we're tracking selling activity. So what I've done is in the blue, I'm tracking Melbourne through the 2020 lockdown, and in pink, tracking Sydney in this current lockdown. And you can see that there's a big dip in Melbourne, and the number of transactions fell by about 70%. So the market didn't completely shut down, but for all intents and purposes did shut down. But on the right, you can see that there was actually very little price impact. So this has tracked Sydney and Melbourne prices through 2020 across Melbourne's lockdown. And you can see that they tracked each other very closely. There was a small dip in September, I think that is. But then prices in Melbourne, once the lockdown lifted, caught up very quickly. So based on the experience last year, we would expect that activity is going to slow in Melbourne and Sydney, but prices are going to be pretty resilient. Now, I've got a couple of charts on rents, which might be interesting because I think we were going to potentially go to that. Now, what I've done here is I've looked at rental yields. This is rental yields across the country relative to, say, a safe asset, so 10-year government bonds. So yields have been falling everywhere because of interest rates. The Reserve Bank has enormous control on the whole kind of market of yields on all assets. But you can see that rental yields on property remain quite elevated relative to history. So yields are pretty good relative to other asset classes. Sorry, did you have a question?
Do you see rental yields keeping up with the capital appreciation of properties?
So that's a good question. So maybe I'll just put the background of this is rental yields across the country. You can see that rental yields are higher outside of capital cities, particularly outside of Sydney and Melbourne. So we've got two things here. So the way this tracks rental yields is it looks at kind of like it's a trailing measure. So we look at advertised rents over the past 12 months and advertised prices over the past 12 months. And I would expect to see as prices continue to rise, we're going to see yields continue to fall. We've also seen rents fall over the past year. on average across the country. Now that is probably looks like it's starting to reverse, but yeah, I would expect that this rental yield premium that we're seeing here is likely to erode kind of in the short term. These things have a way over the long term of kind of equilibrating to what you see, what is like an expected premium for the asset class. So you would expect that to come down maybe to closer to 2%, as we've seen kind of the average over the past.
And I think that's also what's driving your investors coming to the market, because they're seeing those yields a lot higher. But and they want to get in before the prices get too high, before those yields come down. So if they get in early, they'll still ride the yield curve for a little bit.
Exactly right. So all those people, at the top of that curve there, right, you're getting 3.5% yield over a government bond, which is very, very high historically. So yeah, that's exactly what's driven those investors coming back in the market.
Yeah.
And then so what investors should also be thinking about is, their cost base of when they're buying the asset and what their yield is on that particular asset over the lifetime of that asset. So if they can enter into the property market and get attractive yields of 4, 5, 6%, well, then as that property goes up in value, they should still be looking at their cost base and what the yield is on that. So their rental yield is only ever going to increase as their rent goes up over time on the cost base of that particular asset. So yeah, very attractive time to be getting into property with other interest rates so low.
Great, and I might just, this is just a quick chart on inner city rental markets. Essentially, it's showing that while we've seen this like temporary pain with rents, lots of recent immigrants like to rent in inner city markets, prices have been actually quite resilient in these markets. So I think this again speaks to this fact that investors can see past the short term, and they can see that kind of this crisis will end and there will be demand for these properties in the future.
And I think that's always the key when it comes to property, isn't it? Understanding what's going on, but having it as part of an overall medium to long-term strategy. And so if you understand the pain points today, but it's part of a medium to long-term strategy, you're going to make smart decisions today rather than just responding out of fear or nervousness because you don't really know what's going on, because you don't actually have a strategy. And I think that's absolutely critical, especially when you're looking at yields, because stronger yields are going to have a significant impact on your overall wealth strategy, or as you move towards trying to achieve any level of financial independence. It's going to help you achieve that sooner rather than later. And so it's anyway, yeah, cool.
I was just going back. We talk about this often in our own meetings, Ray, where we discuss, where's the next trends coming, and where should we get into now? What would be a good buy? And we've been looking at I've been looking at the inner city unit market for a little bit, going, when this thing lifts, when things get where we can get some immigration coming back, that's going to move again. So it's not just what we talk about. Don't just listen to what's happening in the news. Look at what's happening and read what's going to come next. And this is why it's good to have this data, so you can actually get behind all the noise to see what's going on.
And that's part of the conversation tonight, because this exodus we're seeing, from city dwellers to greener pastures to regional areas, and pricing, in the metropolitan areas coming down or holding steady, but rents, vacancy, and all that kind of stuff going on. Do you go where everybody else is buying, or do you go and buy where people aren't buying? Because you understand that in the medium to long term, that's going to prove to be a better strategy. And rather than just following what everybody else is doing, it's so important to have a look at this data, look at the trends, really see what's going on, and cut through the noise and the hysteria and the FOMO stuff that's going on, and make really educated, strong strategic decisions as part of your wealth strategy.
Overall plan. Yep.
As your overall plan. Yeah. Cool.
Yeah.
Thanks, Paul.
I had a great mentor said to me, go against the herd. The herd's going one way, look behind it and see where the opportunities are, because that's where you'll find them. That's where you make the money.
Unless the lion's chasing the herd, and you better run with the herd too, man.
Yeah.
Back to you, Paul.
Okay, easy. So I've done a bit of work on this regional shift and how it's affecting prices. So now there's a lot going on here. Essentially, the red dots here are regional areas, and the blue dots here are capital cities. And going kind of left to right, you've got where people have been moving to. So you can see that more people have been moving to regional areas, as we've been talking about, with the exception of Brisbane, which has also seen a big influx of people. So people have particularly been moving in terms of raw numbers. They've been moving to regional New South Wales, regional Queensland, regional Victoria, and Brisbane. They have been the biggest places that we've seen people moving. And you can see here that on the y-axis, so from top to bottom, we've got price growth. So there's this really tight relationship to where people are moving to, and has seen bigger price growth than places where people are moving away from. So in particular, Sydney and Melbourne have seen big falls in population over 2020. These data are. So I think what I find interesting about this is this regional shift isn't driven by speculation. This isn't investors going into these regional areas. This is driven by people actually moving from capital cities. And I think that's important to show that that's going to be a long-term trend. It's not just hot money chasing what prices are going up. It's actual people moving. And then what I've plotted here is this is a ratio between capital city prices in a state and regional prices in a state. And this is just for houses. And so what it shows is that regional areas are still pretty cheap compared to history. So the price, so New South Wales at the cheapest, a regional house is half the price of a Sydney house. In Queensland, it's like 85%. But if you look back in time, these ratios have been much higher. So regional areas have been more expensive than they have been now, despite the price growth we've seen over the past year. So I tend to think that there is still this value for people moving from capital city regions, which is why I think there is likely to be continued migration towards these regional areas. And that's all I had. So I'm happy to kind of answer questions or open it up to kind of a broader discussion.
Well, that, and what you just finished up with, Paul, around the whole idea of migration, and obviously people movement is so key in understanding or looking at getting insights or trends on where you should be investing, and not just saying, oh yeah, like read in the paper, regional hotspot, go and buy there, but understand really the dynamics of what's going on in those regional areas. And I think, like you highlighted, it's a lot of people are choosing to live there. It's not somebody in the city going, oh, a great opportunity, I'm going to buy an investment property and it's going to push up prices. It's actually people choosing for a number of reasons to move there. One of the questions I've had, though, as I've been thinking about it, is was there an underlying sentiment within Australians before COVID, and was COVID simply the catalyst that enabled us to actually make that choice? Because all of a sudden, the shackles of being tied to an office job or an office in the city were somewhat removed. And so now all of a sudden I have the freedom to be going, I don't actually have to live here where, like you were saying before, where it's more expensive. I can move to regional areas and lifestyle, space, all of those things which we can continue talking about, in understanding why regional areas are growing, and as a result of that also, pressure on rental prices. Because in one of the articles from realestate.com.au, Australian regions was 11.3% growth in June, which is pretty significant rental growth. And obviously that has a big impact if you are an investor and you're able to capture some of that.
Yeah, definitely. So I think you're spot on. I think if we go back before COVID, the traditional flow of people, and like I'm generalizing here, but immigrants, when they came to Australia, there's obviously no immigration at the moment, tended to settle in, we get a lot of high skill immigration. They tend to settle in cities. They often generally have jobs lined up already. We also get young people from regional areas moving to cities as well. And then you get this net flow of existing people in the city moving outwards. So this has kind of always been this kind of flow, people in, people flowing out. And what's changed is now we don't have people coming in. And we do have more people in the city that are able, instead of previously, people taking a pay cut to move to a regional area or a regional centre, there are more people. It's not everyone. There's just more people who can do their current city job with city income from a regional area. And that's what's putting a lot of price pressure, both on house prices as well as on rents, is that you've got people who are living and working in regional areas competing with people who are getting higher incomes in cities, again, to generalize about those income disparities. It's just kind of changed the dynamic enough to put pressure on both prices and rents.
Yeah, because it's no different to when we have immigration coming into our city areas and competing, with local Australians to buy property, whether it be an expat coming back with a whole lot of cash, who says a $3 million house for me is cheap. And for us, it's like, oh my gosh, I can't go any above that. And they'll pay a whole lot more just because that's where they want to be. And now we're seeing that kind of process happening in regional areas where, once again, people are going, hang on, I can afford to pay a bit more because comparatively that's still cheap for me.
Yeah, exactly right. And we have seen that's another good trend, is there have been lots of expats coming back to cities and to regional areas where they formerly were from. Yeah, and that's had a big impact on city and regional markets too.
And I read another interesting one, which was even about young people and millennials, that 20 to 35 age bracket, but also young people who are living in country areas, not actually moving to city, which is what we would assume would happen, actually staying in the country or actually moving to other regional areas. And so what's really interesting is to understand who are migrating from the cities, to these regional areas. Are they families? Are they young people? Who are they? Because again, I think that'll help us understand whether the trend that we're seeing will continue, or as some articles say, or some research say, that it's kind of happened. So those who could do it have done it, and so we'll see a bit of a cooling off, bit of a slowdown. Or will that trend continue?
I also think quite interesting that 10 years ago the $1 million suburb was sort of the benchmark of where the wealthier Australians were, but now that's been well encompassed now with the $3 million suburb. So now, with the average price of a suburb is sort of hitting you $3 million. There's about 20 now in Australia, most of those in and around Sydney. And there's something, I think it's about 60 or 65 now $1 million suburbs in Australia. One of the interesting ones was out at Horsley Park. So I grew up not too far away from there, but that's a Western Sydney suburb, it's basically in the middle of Parramatta and Liverpool. And the average price in there is $1 million. So that's where your average Australian or Sydney sider is sort of living. But also now there are sort of 3 or 4 regional areas which are now more than $1 million to live in. So I think this is also very interesting facts, because there's a lot of, it's not just people moving particularly for affordability because it's cheaper, but they're just moving potentially for lifestyle and just overall benefits for their own family. So yeah, I think this trend will continue as work from home continues to gather, if it continues to maintain its current pace.
So yeah.
Sorry, you jump in.
No, go, Paul.
No, I definitely agree with all those points. So it's difficult to get data on who's moving. Traditionally, I think, so firstly, we've got a census this year, which will be an absolutely fantastic gauge of where people are moving. That's the kind of gold standard data on that. But traditionally, it's prime working types, people with families. So people who are in kind of like the 35 to 45 age group. They tend to kind of reach a solid point in their careers. They're expanding their family. That's a good impetus for them to reassess their living. Now on prices, like prices have increased, and that's a yield story. So like people can borrow much more than they could even a year ago, and that's been the key driver of prices. And I think like people get really fixated on the level of prices and hitting those like benchmarks, so hitting $1 million, hitting $3 million, and it's really hard to think. So what is $1 million now is not what $1 million was 5 years ago. That's I think what people have to understand, because you can borrow 50% more than you could 5 years ago.
But I guess one of the things that I again, as I've been doing research and doing some reading, is again around this migration. And when things go back to whatever we think is going to be normal moving forward,
it'll be a new normal.
A new normal. Yeah. Will there be a bit of a U-turn on this migration? And I've read a couple of things around the idea of these fringe kind of zones. So these regional areas that are still close enough where if you have to duck into town, you still can, whether it be public transport or go for a drive, compared to other regional areas which are quite a cumbersome thing to make an effort to go back into the city for a meeting or whatever it might be. So this idea of these fringe zones,
Yeah, so I mean, I don't think that there's anything new with assessing these kind of factors that affect what regions are likely to boom and not. So you're looking at things like transport links, you're looking at things like amenities, you're looking at things like climate. I think all of those things remain important, but I think what's happened is a lot more people are opening up Google Maps, they're opening up realestate.com.au, and they're thinking, what cities are close enough that I could commute a day a week, but are close to a beach, or are close to nice views where I can get a 3-bedroom house so that my kid doesn't interrupt me in my my 7. All of those things I think are just coming to the forefront of people's minds. The same factors that I'm sure, Greg, you would have coached in aspiring investors on 5 years ago are still important, I would suspect.
Yeah, very much so. I've been reading a lot of what you've been saying. I've been reading a lot about these regional fringe areas, and exactly what you're saying. Close to amenities, good transport. Just now, instead of having to go 5 days a week, they now have to go 1 or 2 days a week. So where can I go from there? Oh, I can go a little bit further out. I don't care if it's 2 hours each way because it's only 1 or 2 days a week. So it's starting to push into the Blue Mountains, Central Coast, even a little bit further down to Nowra, Wollongong, Kiama, all particularly coastlines. In Melbourne, their south coast getting hammered because people are going, you know what, I'm going to move down those places. Geelong, there's some Gold Coast, my gosh, that's going nuts. Sunshine Coast, same thing. Only an hour to Brisbane from there, so they can commute with a better lifestyle. So, yeah, I see it I feel from what I'm reading, it will continue because people are sort of waking up going, geez, I don't have to do this. I can do it a different way. And businesses are more open to allowing that now, which is a big change from what it was before. And I don't think that will regress too much. They'll still want people there, but it won't have to be the 5-day-a-week thing.
But I think also if we look at Sydney, for example, urban sprawl now, Sydney 20 years ago had 2 CBDs. It basically had Sydney CBD and North Sydney. Now, Parramatta is already bigger than North Sydney in terms of the amount of people commuting in and out for work. And within the next 10 years, it'll be bigger than the Sydney CBD, just simply because it's got much bigger space to expand. And also with the airport going out of Badgerys Creek, now that used to be the fringe of Sydney, where now that's going to be another central business district, and that's going to push Sydney all the way down south. So those areas from sort of Narellan, Bowral, all the way down that freeway down to Goulburn, you will see that urban sprawl continue to get there. And then Wollongong, which is now, I guess you would say, a regional area, now to the airport, it's only going to be, 40 minutes? Not even, when the new airport's up and running. So I think as Sydney and as Australia continues to expand, these sort of more regional areas will continue to grow because they're just going to have better access and easier access to more jobs that are being made available outside of historical CBDs.
Yeah, I think that's right. And I think thinking about the long-term drivers of property in Australia, it's been immigration and expansion. And that looks set to continue. Australia, if anything, so despite this vaccine rollout, the COVID-19 crisis has kind of cemented Australia's reputation as being kind of a stable, well-run liberal democracy in Asia. It is going to remain incredibly attractive to immigration. It's going to be up to a question of how much immigration Australia allows, and that's a political decision. But yeah, assuming we allow people in, there's going to be continued demand for housing. And as you say, cities are going to expand because there are these agglomeration benefits. People want to be close to other people. That's where productivity happens. Regional centers will get larger and they will draw people in and of themselves. But then it's an open question of which regional cities are going to grow faster than others. Which direction is Sydney going to grow? Questions like that become pertinent, I think.
Yeah. So I guess, listening to what we're all been talking about tonight, that the trends that we have been seeing, this migration from, these city dwellers moving out to these regional areas, whether they're looking for a tree change or a sea change, looking for more space, they're looking for lifestyle. It's actually a decision to improve their life. It's not just around affordability. There's a whole lot of different factors, which makes sense in that that the trends that we're seeing will continue. They may slow down because obviously as a result of COVID, a whole lot of people just pushed the button because all of a sudden they could, whether it be a retiree, whether it was somebody who was thinking about retirement, actually brought it forward, whether it be young families, millennials. And I think, like you were saying before, Paul, when the new census gets done, when is that due? That's getting done in October?
Yeah, I think so.
Yeah. With all that new data coming, that we're going to have a look at, it'll be really interesting to see from that data, the real people movement, because a lot of us are just through observation and what we're seeing and what we're hearing about. But when that comes through, it'll actually put some real a framework around the stuff that we're talking about tonight. And then when the gates open up again and immigration starts coming back into this country, that's going to put some even further pressure on what's going on as far as housing is going in Australia, especially around levels of affordability. And affordability is not just about trying to buy a house. Affordability is also about, can you afford to rent a place where you need to live? And it's coming up with solutions around all of that that's going to need to be looked at, especially when immigration really does start to hammer us again.
Yeah.
But I think that Greg.
I was just something further on that. We're talking about, it's happened since COVID and really pushed off. But I was reading a report that was called the Big Movers Population Mobility in Australia report that came out, and it was June last year, or might have been before June last year, but it was published last year in June. This article, and it says there was between 2011 and 2016 there was already a big move with the 20 to 35-year-old bracket moving to the country, regional Australia. So this is not just since COVID. This actually started happening before that to some degree, but they were actually saying in the report too, when the next census comes out, it'll be interesting how much that sped up from that period initially. So there was a net outgoing, particularly from Sydney. There was a net outgoing in that period from 2011 to 2016 of 4,400 people going out to the regional centres. So we were losing people to the region already. Now this will have probably sped that all up. I'll be interested in getting all the facts in this census to see what that's done. So that's where I feel it's not just it's a COVID thing. COVID's probably made more people realise it, but it was already happening.
Yeah, no, and that's one of the things that I've just been trying to think about is, like I said before, was that a sentiment that was already there, and we actually saw already stuff like that happening, and COVID's just sped it up. Yeah,
increased the amount of people wanting to do it. And it's interesting. It just they were interviewing people out there, and the main key things they loved about going out there was that it's cheaper and more affordable, which is what Paul has already spoken about. For them, so they've got either much lower loans or no loan. They've got really short commute times from the big ones you have in the city, particularly if you're in the Central Coast, Blue Mountains, or wherever you are. And the open space. That was the other thing they were saying. Just love the open space compared to this, particularly if they come from the inner suburbs of Sydney. They love the open space of the country. The downsides of it was medical assistance and waiting lists. That was the downside that they reported on out there. And they feel, in the report I was reading also, they think possibly 30% of people who actually go out during this time may actually come back because they might not last, but we'll see. Depends on where they've gone. If they've gone into a Newcastle or a Gold Coast or Sunshine Coast place, that's not too bad. They're more talking when they go, right out west. It might be a smaller country town.
We've actually gone a bit over time, and I'm appreciative of everybody taking the time tonight. So we might just stop it there. Paul, really appreciate you taking the time to share with us tonight all the insights and the charts and the research on the data that you guys have. Really very, very valuable. Terrific. All right, Greg, Matt, Paul, thank you very much for your time tonight. Our audience, thank you very much for spending some time tonight, and take care. Thank you very much.
Bye. Thanks, Paul.